Have you noticed the price of goods going up recently? It's not just your imagination. Recent reports from CNBC show that inflation is on the rise. The Consumer Price Index, or CPI, rose by 0.4% in March, with a 3.5% year-over-year inflation rate, higher than expected. Now you might be asking, what is the Consumer Price Index? In layman's terms, the CPI is a measure that examines the weighted average of prices of a basket of consumer goods and services, such as transportation, food, and medical care. Interestingly, the core CPI, which excludes the volatile sectors of food and energy, also saw a similar rise, with an increase of 0.4% monthly and 3.8% annually. So, what's behind this rise in consumer prices? The primary culprits are energy and shelter costs. While food prices have increased modestly, it's the costs of fuel and housing that are driving these inflation figures. In contrast, used vehicle prices have fallen and medical care services prices rose. But what does this mean for the average consumer? Real average hourly earnings remained flat, which, coupled with the rising costs of goods and services, means that people's purchasing power is being eroded. But it's not just consumers who are feeling the pinch. The markets have also reacted to these figures. Stocks fell, and Treasury yields rose post-report. The report raised concerns about inflation's stickiness, impacting Fed rate cut expectations. Markets have now shifted their expectations for rate cuts from June to September. Federal Reserve officials have expressed caution on rate cuts, with some suggesting a potential rate increase. This is because services inflation remains high, challenging the Fed's target. We'll have to wait and see what the Fed minutes from the March meeting reveal about future monetary policy. So, in summary, consumer prices are on the up, driven by increasing costs in energy and shelter. This is having a knock-on effect on the market and could potentially impact future monetary policy decisions. For the average consumer, this could mean an erosion of purchasing power if wages don't keep pace with inflation. It's important to keep an eye on these trends and plan accordingly. Remember, knowledge is power. Stay informed, stay ahead.